Elton's retirement journey. Welcome back. I hope everybody enjoyed their 4th of July. Just a recap of our last video, we were talking about the Roth 401k. I had made the decision to get signed up for that. I went over some rules. I spent all weekend listening to the Wise Money Show with Mike Bernard. He's a specialist on the Roth 401k and the Roth IRA. The Roth IRA is going to be your best bet with your after tax money. If you start putting money into that, significant amount, you can put up to $6,000 in it per year, 7,000 if you're over 59 and a half, and somehow something emergency happens, like you lose your job, you will be able to withdraw from the principal amount that you put in. It doesn't matter what age. So I did go back and spot check that, make sure I was giving out accurate information. But as I mentioned in the other video, I wanted to talk about the 6 month review of my investments. And this year has been phenomenal as far as the gains, specifically with techs as well as any index funds and large caps. They're doing very, very well. The other thing is that the interest rates have held very well. And as you know, if you've been watching my videos, I'm over at VO Bank. I'm taking advantage of their money markets and their CDs, and that's held at 5%. Um, so total, I picked up $183 last month in interest alone. So if you're looking at 183 as the minimum, multiply that by 12, that gives you an idea how much cash is being generated in the fixed income, which is something that I need to do as I am 62, and I need to start throttling back on the aggressive investments and have some cash as I plan to retire a couple years early before 70. Unless something drastic happens, I will continue to work to 67. And somewhere after I turn 67, we'll get that mortgage paid off. We'll reassess everything. And then we'll set a retirement date and see how it goes. But for me personally, I track my investment. I'm a do-it-yourself investor. And what that means to me is that I keep an eye on my investments. There were some investments that I've held that did not perform very well. Um, they had some losses, they got their losses. But when you have a bustling stock market and the investments don't grow and you're not losing any money, it may be best to make some changes. So I was active in some trades with some mutual funds I exchanged over. I exchanged one that I'm re-looking at because it has a lot of heavy industries in it, like aerospace, defense, and steel and things like that. I'm keeping an eye on that investment to see how well it does. If the stock market is rising and those investments don't do well, I'm going to liquidate that mutual fund. And I'm thinking about going in a mutual fund that's based on the financial industries. I don't have anything like that. I would like to something like that. The other thing I was doing is the mutual funds. When you have mutual funds like that, you can track their gains, their low to the high over many, many years. So there were three mutual funds that were over in the Fidelity IRA that I saw that it was reaching its all-time high. And because I am getting close to retirement, I'm starting to look at taking some of these massive gains and convert them into cash. So three of those mutual funds, I sold shares at its peak at that time, which is back in March, and I generated $2,400, and I immediately put that in a Fidelity money market. Um, so now with that money market at 2,400, the previous sales of the shares, which I did, was I think it was nine mutual funds. I took $600 out of each one, and that got me 5 grand. That's in a brokered CD right now. Once that broker CD matures, I'll be able to add this other money into it and probably lock in some more rates. But what I'm trying to do is convert some of these gains into cash so that if we have a cataclysmic event where the market is off, has a correction, or it's just down tremendous amount, I have cash to pull from and I don't have to worry. So those are the tips that I wanted to give you today related to the investment strategy. Now, I think going forward that there's probably going to be increased amount of trades, increased amount of activities within the stock market in the future, possibly after election. And with the increased trade and transactions, it's going to put more pressure on these companies to make their quarterly statements. And that could be a reason why you're seeing layoffs in the tech industry. Um, there's with programmers and software engineers, there's a lot of overhead. And if the products you're making don't turn into cash, then there's probably no need for those people. And that's what they're doing. They're restructuring so that they can make their numbers. Unfortunately, it's at the expense of these young people who have made a career and are sitting in these companies. So that's just the outlook that I think is going to happen going forward. I think we're going to be in pretty good shape. Just keep after those interest rates. Again, VO Bank. If you haven't yet, seriously consider opening up a Roth IRA just to get the clock started. And if you really, really want to cover your tail, start pumping some cash into it. Even if it's $100 a month into the Roth, once it builds up to a certain amount, you have any emergencies, you're laid off, you got a big surgery coming up, or you need the money for a down payment on a house, you can withdraw the principal amount out without any penalties or any taxes. And that's the power of the Roth. Plus, you want to get that clock going. So, this is Elton's retirement journey, and this is my 6 month summary. I'm very optimistic going forward. Keep up those investments.